In this video, I'm going to continue my accounting lessons, and I wanted to bring this up to you really super close. Now you can see here, and I'm going to get this as close as I possibly can. You see the word debit right here and the word credit right here? Now I'm going to shift this over just a little bit. Now you see the word debit right here and credit right here? Okay, this is what's going to become important in this particular lesson. Let's say you start up a company, alright, and you have cash of $40,000. Now that cash of $40,000 could actually be put not only in the cash part of the assets, but it could also be put, and I don't have it here, but it could also be put in owner's equity to show you have $40,000 in cash, which belongs to you, because you haven't done anything with it yet. Alright. But let's say when you did this cash, you put it in a savings account and it kind of got locked up, alright? Because in a savings account, you end up in a situation where you can't just immediately withdraw the money like you can with a checking account. Yeah, you have a checking account, you can just write out a little check, and in a day that cash is with somebody else right at that moment. Or you can deposit something within a day. Now, with a savings account, you can actually deposit within a day, but to remove it, you kind of almost have to give 30 days notice, okay? So you can actually get your money out within 30 days of you requesting it, especially if you're going to try to close the savings account out. And for those who have had that kind of experience, you know what I'm talking about. Okay, so you got $40,000 cash, you put it in a savings account, and you go to a loan officer and you say, look, I need a $5,000 truck. Now I know back in the old days, $5,000 could get you a pretty nice truck. These days it probably gets you a piece of garbage. But let's say you go to the loan officer and say, I need a $5,000 truck. My money's locked up in a savings account right now, and I'm going to be able to withdraw a certain amount every month until we pay this off, but I need the truck right now. Well, he writes you out a little loan, and you take that money that he wrote you out a little loan for, you go buy the truck. And then you chart it. So now you have a truck worth $5,000. But now you also have to chart that truck loan for $5,000. Now, let's say a month later, you finally get $1,000 out of your savings account. You take that $1,000, you pay it back to the loan officer. So, cash, we started out at $40,000. We're going to subtract $1,000 off of it. We're going to send that $1,000 to the loan officer, and that pays off for the truck loan. Eventually, you won't have that truck loan anymore, and you won't have to mark it on your liabilities. Because once you paid off $5,000 back, it's gone. Alright, and that truck actually then belongs to you. Now, if you're somebody like me who never gets into debt, then your assets will actually equal your owner's equity. At this point, my assets actually equal my owner's equity, okay? But businesses, sometimes that's not entirely practical. But if you got a good credit rating, it's not such a big problem. Alright, so now you get the general idea. That's what I was talking about in my previous video about how assets have debits and credits, and liabilities have debits and credits, and owner's equity has debits and credits. You're going to debit one side, which is your assets. You're going to credit the other side, which is your liabilities. Okay? And so, as you're paying off the loan, you're going to debit your liabilities, and you're going to credit your cash. Because you're saying, hey, I've taken a whole bunch of cash to the loan officer and paid off $1,000 worth of this loan that I have. Alright? So that's basically how accounting works. It's your debits and your credits. The important part of all this is knowing which column to put it in. Do we put it in the debit column? Do we put it in the credit column? Do we call it an asset? Do we call it a liability? That's the trick of accounting. And as soon as you figure that trick out, you're in good shape. Alright, this is accounting lesson number 3. I will cover more in a future video, so stay tuned.